Hi, this is Jared Polak, founder of Entre Results, author of Entre Balance. Back for another fun podcast today. We're going to look at the topic of finances made easier. As I've had the privilege, and our team has had the privilege to work with just a variety of different businesses, different business leaders and business owners, oftentimes, especially for newer businesses or for smaller companies, the finances are the most confusing part of running a business. So we're going to look at 5 ways that we're going to actually contrast personal finances with business finances. So your own personal individual finances with the business. And as we compare these and contrast these, I'm hoping that it'll make this a little bit easier to understand the business finances. So number 1, and this is probably the simplest contrast, is it's good to make more money than you spend. So personally, if you earn a certain amount of money, it's good to spend less than you earn in your personal income, your personal household. You want to make more money than you spend. If not, you obviously go into debt, and that's a bad thing. Well, same thing with business. You have a certain amount of revenue coming in, and it's good to spend less than you make. And so in terms of your total revenue, you want what you pay your employees, your overhead, all the other expenses and marketing to be less than you earn. And if you do that, you will have a profit. And profit isn't everything, but it's better to be profitable than not to be profitable. Number 2 is emergency funds. So personally, it's good and healthy in our own individual personal finances to have some money set away, kind of a rainy day fund in case something happens. There's different numbers or months that people suggest. Some people suggest, a 3 to 6 months of being able to cover your expenses. So if you spend $5,000 a month, for example, and if you wanted to save 3 months, that'd be $15,000 personally. In business, it's the same thing. You want to have an emergency fund. Maybe it's not 3 to 6 months, but maybe it's 1 to 3 months of operating expenses. And so if for some reason no revenue came in, you'd be able to cover your expenses that month. It's very healthy personally, and it's also healthy to have that emergency fund for the business. That's number 2. Number 3 is salary or revenue in business is not necessarily the most important number to look at. Now, personally, say you're making $100,000 a year in salary, but imagine if you spend $110,000 or $120,000, kind of like point number 1, well, then you'd be in the negative. But if you made $80,000 a year and only spent $50,000, you'd have an extra $30,000 left over, which if you put it into the bank, it would probably be cash. So after taxes and everything like that have been taken, and I guess we're assuming after like $80,000 after taxes have already been taken out, that's kind of your money coming in. Well, in terms of a business, revenue is sometimes called a vanity number. People say this is how much money is total income or total revenue for the business. So say it's $1 million business. Well, that's not necessarily the most important number, because if we spend more than $1 million, then we're in the hole. And so revenue is kind of a vanity number where there might be better numbers to look at, like cash. Personally, cash in the bank, or in business, cash in the bank might be a better number than total revenue, or salary as it's contrasted to personal finances. Number 4, both personally and professionally, be cautious of debt. Personally, debt can be a very dangerous thing to owe other people money. And same thing with business. Personally, there's bad debt, and I would never call anything good debt, but there's not as bad of debt, or debt that can be leveraged to a certain degree. So personally, if you own a home, you have a mortgage, that's debt on your home. Not saying a mortgage is necessarily a great thing, but it's not a bad thing either, because personally you have an appreciating asset, an asset that is becoming more and more in value every year. And there's also obviously other tax implications to a mortgage as well. And so that's not like horrible debt. It's not the greatest thing ever, but it's not bad. Same thing in a business. Businesses themselves, generally speaking, are appreciating assets, or they're assets that you have. So a lot of debt isn't bad, but it's not necessarily good either. And so there's certain things that can be horrible and in terms of debt for a business, and there's certain debt that maybe is just doable, or it's something that you need to do. I know a lot of times when people are looking to grow, they acquire debt in order to be able to have and fund that growth. Well, debt isn't necessarily good, but it's just not as bad as some other debts. Like if you, in a business, just try to purchase something that you don't really need, or it's not going to have a huge impact on the business, but you kind of purchase it just because you want it or out of vanity or whatever, that could be something that could create you into a debt situation, which could be bad debt. So overall, point number 4 is be cautious of debt. Number 5, last and not least, it's important to understand the numbers for both personal and business finances. Just knowing the numbers personally, knowing how much we spend every month, having a budget, knowing how much money comes in, knowing when you have to pay money for certain bills, electric bill, water bill, mortgage on the house, knowing when those things are due, it's very important. Same thing for the business. It's never a good idea to put our head in the sand and ignore the finances. What are the numbers? When are the bills due in the business? What does cash flow look like? What's the revenue, although maybe not the most important, maybe gross profit, net profit, accounts receivable, accounts payable. All these numbers are important to know. So I want to encourage us to know the numbers. So hopefully this simplified it a little bit, although again, finances aren't easy. Hopefully this is finances made easier. Go out and take action and have a better than great day.